Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, December 30th, 2009. Well, folks, we're seeing a slightly lower market across the board, but it's basically flat. I mean, you can look at the market and see what it's done today. It's been a little bit on the choppy side, but in a very, very tight range, basically a 50-cent range on the SPY, which is a very, very tight range. But overall, the spiders are trading just slightly to the downside, down 10 cents. The Dow is down 2 points, Nasdaq down 3, S&P 500 down about 1.5. So about as flat as you can be with a slight negative bias here across the board. Now, we've had a nice little move up here on the spiders off the 200. Second time today you've hit the 200 and had a beautiful bounce. Now I'm going to talk about the reasons for the last couple bounces, and I want to really dissect them overall to give you guys a good idea of why these bounces are occurring. Not only at the 200 moving average, but there are other reasons for that as well. Now, what you can see today here, just on a technical basis, and again, we're going to cover the technicals of the intraday SPY. Then I want to look at the daily charts of Amazon, Apple, Goldman Sachs, those type of plays to give you guys a little bit of an outlook into tomorrow, into early next week. But what you can see about the spiders today is that you gapped down and tagged this 200 and this dotted trend line. Now, I have an X through this area. The X stands for a general area of major support. I said in yesterday's premium video to the Research Center subscribers that I did not think that this market would break this X to the downside in the next 2 days. So far, I've been dead on accurate in that. Another just a great call in the Research Center that's gone out to the premium members. We'll talk about some other ones as well. But in any case, what you can see today is you gap down, tag that 200, pierce it, and you go right to this top dotted line. Now, you have to understand where that dotted line comes from. If you scan back to the dotted line, you can see there's a gap right here, and this is a gap window. So not only are you hitting the 200 moving average there, but you're also hitting a gap window. Therefore, you have two key levels being tagged, not just one. The more levels you have, or the more major support levels you're tagging in one area, the more likely the bounce will be and the higher percentage trade it'll be. So sure enough, based off that point, you can go back and see the market. Look at that rally. It takes you all the way up above this little white-green trend line, takes you all the way to gap fill, and the blue trend line. So again, here's another situation. So the long was traded or the dictated by the fact that you pierced the 200 and the gap window right there. That's where you go long. You look to move out at gap fill and the blue trend line, and you look to short it. Why would you look to short it at that blue trend line? Well, simply put, you have the same situation. Not only do you have gap fill right here, all right, but you also have a blue trend line of resistance at this point. Okay? So blue trend line of resistance with a gap fill, just like down here, two signals, right? Two signals to go long, two signals to go short. Look at the market pull all the way back in. Where do we go? We go right back to this support line, which, by the way, was pushed up, and you can see taken out all the way to the upside to that blue trend line. You come back into it, you tag that trend line, you trade sideways, slightly up, pierce it, go right to the 200, then reverse to the upside here, and all of a sudden we're seeing the markets push up nicely. You got a little bit of a fake print back to the lows of the day, but for the most part, this market now is trading on extreme, and I repeat, extreme light volume. All right, and that's really what you have to expect, folks. Again, for the Research Center subscribers, those of you that are premium members out there, you know that we've basically told you for the last 2 weeks to have a neutral to positive bias in the markets, and that's exactly what's been perfect. I mean, that couldn't have been any more perfect as the market's inched up kind of neutral to positive pretty much almost every day across the board. Today looks no different with basically a flat market on our hands right now as the Dow is basically flat. Let's see if the Dow has turned positive yet. Yep, the Dow just went up about 60 cents, so it's really right on the flat line, but has turned positive now. Nasdaq down 1.5. S&P's only down 90 cents. So you can see a little bit of an inch up. Wouldn't surprise me to see this market go back to around the flat line and just hold there the rest of the day. Even turning positive would not surprise me. Because remember, big traders, just like the pros, all right? You have a game like a football game late in the season where it doesn't mean anything. They're going to put in the backup quarterback, the backup position players. It's generally what's going on right now. With that, they're basically dictated and they're told, the backups, the substitutions, they're told to keep this market flat to positive. Just keep it in this range. We're going to come back on Monday, Tuesday of next week and really, ramp it up, and we'll create the big move that we want to create. Your job, again, being the backup, just hold it steady here. That's all we want you to do. Exactly what happens on Wall Street. Again, the big traders are done for the year. Today, tomorrow, full trading days, but the volume will just continue to be lighter and lighter. Right now, we've done 37.5 million on the SPY. That should only pan out to, my guess is, be around 65, 70 million today in total volume, which again will be the lightest trading day of the year. And again, that's not surprising. Into the end of the year, you expect that. All right, very, very normal. All right. So again, those things are the things you want to look for. Again, it wouldn't shock me to see this market trade up to the blue trend line and to this 50 moving average. This would actually be my target for this move. Why? Because it's a double top back to resistance plus the 50 moving average. So you have multiple levels right there that are showing resistance. Not only a double top gap fill again, but at this 50 moving average, that's another third level of resistance coming into play. So more than likely, you're going to trade up into that level, which again will take the markets basically to the slightly positive bias side of this day. Okay, a couple other things to go over. What to look forward to into tomorrow? Well, number one, you have to be watching your 113 level. 113 being a master level named by In the Money stocks. And again, these levels are particular and specific to In the Money stocks. We're the only ones that put these out, these levels. And again, 113 has worked out beautifully. We called it multi-weeks ago to look for that level. Sure enough, just into the end of the year, you tagged it on Monday, you tagged it on Tuesday twice, and then Wednesday we've pulled back underneath here. There's a possibility of tagging it in the next day or so based on light volume, but that should be a very, very heavy resistance point to look for. Okay? On the downside, you continue to watch this 112. Again, as I said to the Research Center subscribers, I do not think that this market will trade through this 112 level into the end of the trading tomorrow. Now, once we get into the new year 2010, anything is game. Volume will start to return. We'll start to get some good action here. But into the end of the year, there's just not enough volume to really push it down, unless, of course, some crazy thing happens geopolitically. You know, what if something happens with Iran? What if something happens with this country, with that country, defaults, whatever it may be? Then you'd obviously get the reaction. But assuming none of that craziness happens today or tomorrow, you have to look for this market to basically stay between 112 and 113 on the SPY. Remember, the backups are in. They've been told to keep this market steady. Just float it back and forth. You guys can move it up, down, scalp a little bit if you want, but it's going to be in a tight range. Okay? So that's what we're seeing there on that chart. Now let's touch on some other key things here. We can touch on the dollar quickly. The dollar is basically flat. It's coming in very nicely. That's giving the market a little bit of a boost here. You have the dollar UUP, which is the dollar index, trading up 3 pennies. In addition, we have the GLD down just slightly, but look at the move up on the GLD as the dollar's fallen. GLD has made a beautiful move up, actually just tagged the 200 moving average. That would actually be a very nice short. Also, you have gap fill right here as well, and the 50. So right in this area is a huge amount of resistance on the GLD. It got right to the lower end off an extension move and is pulling back. If it makes a move up, I'd probably watch for gap fill and pierce to the 50 the next time up for a nice little shorting opportunity. All right, the USO, you can see USO has inched back up as the dollar's fallen as well. Oil just slightly positive on the day. Taking a look at some daily charts. I told you I'd get to those daily charts, and we can see here daily charts, that's the GLD, but I want to focus more on Goldman Sachs. Goldman Sachs, nice little move today. Look at this beautiful bullish pattern. We talked about this on the weekend free video, saying that the leaders of this week might be the financials. And again, you can go back and watch the weekend free video that I put out on the blog, on YouTube, on many other websites out there that were picked up or picked the video up. But what you can see here, folks, is that look at the bullish consolidation. I noted this in the weekend video, saying that the financials may be the place to be this week for the little bit of an up move. And look at that Goldman Sachs move on the daily. So in spirit of bull flag, look at that. Up, sideways consolidation, breakout. Very nice move. Let's take a look at some of the other charts. How about Wells Fargo? Wells Fargo still has that bullish pattern in play. It still hasn't really started to move up. It's got a little bit of a green candle there starting, but for the most part, that's a little bit of an in spirit of bull flag as well. Let's take a look at JP Morgan. JP Morgan, same general chart, up, sideways. And again, based on that, it told me that to look for the financials. If the market's going to stay about the flat line to positive, it probably will be the financials that are going to take that in that direction, and that's looking to be the case, so a good call in that respect. Now, just a couple year-end things I want to make the announcements of. Number one, 2 hidden gems debuting in January. Average return in 2009 for each hidden gem play was 129%, folks. 129% for the hidden gems in 2009. We're going to give 2 out in 2010 January, just for January special. So 129% average return. If we can just repeat that, I'm going to try to beat that. But even just repeating that, think of the returns. Think about how much a $49.99 subscription costs to the Research Center with 129% return average. I mean, think of the no-brainer way, and that's not even including everything else that comes with it. Remember, you get the nightly videos that I do personally, which again, 40 minutes on hardcore technicals. You want to learn, you want good guidance, that's where you got to be watching every night, 40 minutes long. In addition, daily market reports with master levels, technical tactic educational videos, hot charts and alerts with all the key alerts that the pros are getting. And this is all stuff that institutions are getting, folks. We're giving them out to you all. Again, new year, be on board, be ready, be involved, start learning, start profiting. As I always say, live, learn, and profit. Bottom line, folks, that's what it takes. Have a wonderful rest of the day. We'll be back tomorrow for an intraday video. Again, last one of the new year. Have a great new year for those of you that don't listen to us tomorrow. Take care.